Dwayne McAllister, what is the state of the states? Each day we get a new story about another state heading off a fiscal cliff.
Well, actually, the state of the states is improving, I would say, that even though the headlines tend to look at the negative side of things, 29 states are expected to come in above their projected budget this year, which is well above where we were a couple of years ago. We've dug out of that fiscal hole and we're on the right track now.
Well, which states are you investing in? Which are the best ones out there?
Well, there's lots of good ones. We invest all across the country in the Marshall Intermediate Tax-Free Fund. The states we like are those that have been more depressed. California, Florida, Arizona, those that were hit the hardest. We look for the best opportunities within those states because there are really strong credits in even the hard-pressed areas.
And you like geo bonds or revenue bonds, and where are you investing along the yield curve?
We prefer revenue bonds. We're about 2/3 revenue bonds and 1/3 general obligations, but the part of the curve that we like the best is the intermediate part of the curve. We have an intermediate fund, but that 5 to 12-year part of the curve is really a place where more people are putting their money today.
And what kind of yields are you seeing there right now, and how does it compare to treasuries where you're getting nothing for your money?
Well, correct. I mean, the dividend yield on the fund is about 3%. And so if you look at 3% plus the roll down on the curve and that intermediate part of the curve, you're looking at maybe a 4 or better than 4% kind of return on a total return basis.
And what type of credits are you avoiding right now?
The credits we're avoiding are sectors that are senior care, land development, tobacco, those kind of things where there really truly is a different kind of risk than traditional municipal exposure. We like the revenues, as I said. Essential service revenues are really our preferred sector.
Now, munis and muni funds had a great year last year. A lot of it was thanks to an early sell-off because of analyst Meredith Whitney. A lot of people got scared about munis and states going bankrupt. They sold off, but they came back really nicely, even started trading at very high levels. Was she premature, or was she wrong?
Well, Meredith was right in the sense that she expected the federal government to squeeze the state governments to squeeze the local governments, and all that is correct, and it has happened. But what she was wrong in was that the strong fundamental strength at the local level of the essential service revenue bonds, the local general obligation bonds, she underappreciated the strength that's there, and that's why the default statistics haven't changed despite her dire predictions.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to